Today we will see how crazy as hell the stock market will be for the new year. Just some analytic on the market to see. Please, before we start, subscribe, like and share. Thanks. Now let's begin. In 2023, which proved to be a significantly positive year, we now need to delve into what lies ahead. Specifically, let's explore the implications of Catalyst, particularly its impact on the recent trading days and its influence on my stock picks moving forward. We'll address the stock picks shortly. So I've extensively covered various perspectives, including insights from some fundamental of some stocks and European developments, regarding concerns about an impending recession. To address this fear, I've delved into historical data, specifically examining whether manufacturing recessions have historically triggered broader economic downturns. This analysis aims to discern whether weak manufacturing numbers are indicative of an imminent recession or merely a reaction to other economic stressors. So my questions to you today? Are you inclined to continue purchasing stocks due to concerns, or do you fear the possibility of missing out? Conversely, are you contemplating selling amid worries that things might not improve for the company? Throughout this year, several noteworthy developments have escaped investors' attention, as their focus remains fixated on all things related to Nvidia. One significant factor is the substantial drop in oil prices, marking the most significant annual decline since 2020. The pullback in oil prices is pivotal, given its importance to many consumers in the country. Taking a historical perspective dating back to 1937, we observe that the causes of recessions have varied. The 1937 recession, for instance, was rooted in fiscal responsibility, where a lack of fiscal debt growth contributed to economic contraction. Fast forward to 2023, and we find ourselves in a different scenario. The current economic landscape involves the Federal Reserve proactively lowering rates to support the economy, coupled with continuous government spending, in contrast to the circumstances leading to the 1937 recession. Moreover, investors are now grappling with the resurgence of student loan payments. Gold prices have experienced their first annual gain in 3 years, surging by 13%. Consequently, gold stocks are performing well in the market. Additionally, the ongoing pressure on the dollar is boosting profits for multinational companies, likely to continue enhancing overseas profits in the upcoming quarters. There are several factors at play, and one crucial consideration is when rate cuts will be initiated. The calculations across firms vary, and the hope lies in the extent of these cuts. Goldman Sachs, for instance, does not anticipate the Federal Reserve to lower rates until the fourth quarter of 2024. It is crucial not to expect a drastic pivot or massive rate cuts from the Fed chair. However, conflicting opinions exist, with some suggesting as many as 6 rate cuts next year. Expressing skepticism, one commentator dismisses the notion, deeming it ridiculous. A scenario where the Fed implements 6 rate cuts in the coming year is seen as alarming, potentially indicating an economic recession and a substantial decline in the stock market. The sentiment is clear. A Federal Reserve resorting to such drastic measures would be deemed dreadful for the overall economic landscape. Examining subsequent years, such as 1945, we witness the adverse effects of massive cuts in government spending, a stark contrast to the present situation. This historical analysis serves as a reminder that economic circumstances are nuanced, and while certain patterns may repeat, each era presents its unique challenges and solutions. In conclusion, the ongoing narrative about a potential recession warrants careful consideration, but it is essential to evaluate it within the broader context of historical trends and current economic policies. This analysis aims to provide a balanced perspective, recognizing both similarities and divergences in economic patterns over time. So let's do some great fundamentalist on the stock during the new to see how thing will be ended. Please, if you like this video, subscribe, like and share. Thanks.